What's up, everybody? Welcome to another edition of Zacks Live Trader. Here with you, as always, I am the People's Champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, I am scrambling here on Las Vegas sands. Why am I scrambling? Well, I don't know about you guys, but every once in a while, I try and, jam in a quick errand. Today, I did just that. So I had to get a quick part from the Chevy dealer, right? That got overnighted in there. And then I had to just drop the car off at the place to get it installed. And then my girlfriend was going to pick me up, right? So I had it all planned out. So I called a Chevy dealer in advance to ask if the part was there and let them know I'm coming right away. So by the time I get to the Chevy dealer, I stand at the counter for 5-10 minutes. Then somebody comes and talks to me. Then they take my invoice, they go off in the back, another 5 to 10 minutes, and then he lazily brings me my box with my parts. The sales department over there, I give them an A+. The parts, you guys get a D-, if they even have D-. That's what you guys get. One step above failure, because at least you found the parts, so there's a plus. But the rest of it was just stupidity. No reason it should take that long. And that's my rant. So there's that. So then I drive over to the place where it's supposed to get installed. They were fantastic. Sure enough, I thought my girlfriend was going to be there and pick me up right away. As I asked her, I was like, yo, be there at 1:45. And she was not. So then I had to call her. And she said, oh, I thought you were going to call. I'm like, ah. But I made it. And here I am. And we are live just about at the right time. I think I was on like a minute too late. So that's all good. So Nana Quasi, hello. First time I've ever seen your name here. Welcome. PJ, as always, good morning. How you doing? Trevor, what's up, buddy? Nice to see you. Jim, good morning / afternoon to you as well. It's afternoon here in sunny South Florida. Tracy, how you doing? Frank, I think that's a new one. Frank, you new? I don't know if I've seen you before, Frank, but welcome. Welcome, welcome, welcome. As part of the welcome, guys, gals, if you're not already hooked up in the chat room, you can see it coming along the bottom of the screen there. That's http discord.gg/pbwcmsg. No, it's not the coolest looking link in the world. However, it works. So that's where you guys should go to come and hang out with us in the chat room. There's a lot of ideas being tossed around there. If I don't have the idea here, sometimes I have it over there. But really, it's all about the community. It's all about you guys that are in there sharing information. Awesome stuff happening. I like it. It's tons of fun. So there's that, and I got a few emails over the week, over yesterday. What's today, Tuesday? So yesterday, today, I got a handful of emails of new people saying, hey, how do I get in on these shows? When do I get access to them? Can you put me on the email list? Of course, all you got to do is shoot me those emails, livetrader@zacks.com. I will make sure you get all the info on all the shows. So this week, Las Vegas Sands today, Starbucks tomorrow. Hefe, I know eventually you're going to come in here. You're welcome. And then Friday, we're going to do the morning after. Haven't done a good solid morning after session in a while, so I really want to do that. And then, of course, GBU. The GBUs, I've been slacking a little bit. I don't know if you've noticed. I got to find a nicer way to do these because it's just not working for me. But, yeah, Brian, how you doing? All right, good. Everybody's here. Now, there is a little bit of a delay. I don't know if you guys will notice that or not, but there's a delay between when I talk and when you guys actually see it. So it's kind of like we're in the Matrix. It's kind of weird. I think it's like 45 seconds. So if you put something in here and I don't get it right away, I apologize. All right. Woo! Man, that was a lot. Okay. Just wait. I'm going to take a picture of the car when it's done. I'm getting a little hood sticker put on it. $300 for a sticker. I mean, what is going on here? It's a decal and it's permanent. It's supposed to make it look super cool, so whatever. But I have a disease and it is cars. This is why I have to trade so that I can afford car parts. I know it's stupid. I get it. Wasting your money. I get it. Hey, we all got our thing, right? That just happens to be my thing. I don't go on vacations. I buy cars and then spend money on them. That's just my thing. All right, so let's kick it off here with the price consensus and EPS surprise chart here on Zacks.com. This black line corresponds to the right Y-axis, which is price, so just like a normal price chart. Then you notice these little red and green arrows. No, it's not Christmas time here, but green arrows are earnings beats. Red arrows are earnings misses. Okay, so you'll see a string of beats here on Las Vegas Sands, 1, 2, 3 in a row. Now these multicolored lines represent the evolution of our Zacks consensus estimates over time, correspond to the left y-axis. Dean, I got your email. I thought you were going to make it. Good to see you here. And Michael, sir, how you doing? So they represent the evolution of our Zacks consensus estimates over time. If you're not a believer in earnings, charts like this should make you a believer, because you can see when the market starts to turn around in terms of EPS estimates for Las Vegas Sands. That's really when the stock starts to take a tumble, and as those earnings estimates drop, so does the stock. The other thing about these earnings trends is that it takes a while for these to develop over time, right? So seeing this trough is a good thing, and you know it's not apt to reverse as quickly as stock price, right? So you see here, even as this trend started to slow, and can you guys remind me to do the historical Zacks rank in our other section? Or why don't I just do that now before I forget? How about that? Isn't that better? Just do it before you forget, Dave. Ranjit, how you doing, buddy? Welcome. You're going to see something cool here. So this is 2014, so mid-2014, right? Let me see if I remember how to do this now. Bust out my G14 classified stuff. Actually, I don't remember how to do that. Why did I say that when I don't remember how to do it? I remember how to do it. Zacks rank. Ha ha! Look at that. I click Zacks rank, and it's almost like I knew what was going to happen. All right, now let's go 5 years on this. Okay. Now look at this. Remember what I was talking about? What'd I say? Mid-2014, sort of. Look at what happens. As the earnings dips, which we already knew there was a dip, right? We knew that because we saw that on the other chart. That also happened to be when Las Vegas Sands flipped from a Zacks rank number 2 buy stock down to a hold. And then it got negative here, okay? Now, basically these ratings, these strong sell, sell, hold, buy, sell, isn't a bunch of us getting together and deciding we should buy these or sell these. This is based on aggregated data we get from other analysts, okay? So if enough of them are putting their estimates to the downside, that's going to shift these from buy down to the different basic levels, right? But the important part here that I wanted to hammer home is as we saw those estimates come down, you saw the stock go from a buy to a sell, right? It really wasn't a sell till here. That's when those estimates started coming down, and then things really got nasty, okay? So that's all. Don't get so engrossed in the Zacks rank in terms of just the sheer number. What's more important is the trend in earnings. Because what we're doing with the rank is we're just attempting to simplify and quantify the trend in these earnings, okay? So here we're seeing a little bit, right? Rolling over, and that's what you have, right? It's rolling over, and we're golden, okay? And then we see here the trough, and now we're starting to tick up. So enough of the history lesson. What's going to happen in the future? What do we have now? 2017 estimates, well, heck, 2016 estimates kind of ended on an uptick. These have continued to go to the upside, and now you've got 2018 going well too. Bruno, how you doing? All the way from Portugal. Welcome. So uptick overall. So that's a good thing, right? Well, no wonder. That's why the stock is up so high. But now if you look at historical EPS, nowhere near where you were when the stock was $85, right? Hefe, I told everybody you were going to be here eventually, and you're welcome for Starbucks ahead of time. So there's that. Detailed estimates page. So right now they are Zacks rank number 2 buy. But why? Value style score of D. Growth B. Momentum B. Top 39% of our Zacks industry rank. So we take all these gaming stocks, look at their Zacks ranks, and see what that average Zacks rank compares to other industries. They're going to report after the bell tomorrow, so you got the rest of the trading day today and all of tomorrow to figure out exactly what it is you want to do, if you want to mess around with Las Vegas Sands or not. Revenues. Sales estimates here for Las Vegas Sands. Current quarter, just looking for a 4.23% increase year over year. Next quarter looks like 3.38. These NAs keep popping up everywhere. Next year looks like 2.76% revenue growth. So decent growth. Not spectacular, but that's why they're a D in terms of growth. But now, translate that on over to the EPS side of things. Current quarter, 24.19%. Current quarter revenue growth, EPS growth rather. Shelton, how you doing? Welcome to the show. Current quarter, 24.19% year over year growth. Next quarter slowing a little bit to 16.67, but still current year pretty spectacular, 24.46. But look at this, slowing into next year. What's the deal with that, huh? Oh, you know, I need somewhere in between here. If you guys notice, this is like, I guess that's thick enough, and this is way too thick. If there was one right in the middle. Oh, the problems of a live presenter on YouTube. All right, so let's look at the overall agreement here. Now, what does this mean? This is tracking analysts that have increased their estimates versus analysts that have decreased their estimates over these different time periods. So you'll see here, over the last 60 days, he had 4 analysts increase their earnings estimate for the current quarter, 2 for next quarter, 5 for the current year, and 5 for next year. But over the course of the last month, only 3 of those have happened, 2, 3, and 3. And then now, if you look over the last week, whole lot of nada, right? So nobody's gone out and really done anything. There's no chutzpah. That's what I like to say. It's like it takes some real chutzpah to come out here and increase or decrease your estimate right before an earnings report, right? Increase even more so, though, because they're trying to be accurate. Now, what has the overall effect been to our magnitude or our Zacks consensus? We can see how the consensus has changed over time. We saw that in the price consensus and EPS surprise chart already, though, with the lines. The lines. We're increasing the different colored lines. Current quarter, 71 cents up to 77 cents, so a little bit of bullishness. 72 to 77 for next quarter. Current year has gone from 276 to 290, while next year 283 to 308. So they are still kind of ticking up, but starting to run out of steam a little bit, my friends. Running out of some steam, and now you can see here, last 3 quarters, boom, boom, boom. So, back on this revenue side of things. See what we got. So 2015, major slide. 2016, you also had a contraction, and this is just on the revenue side. 2017 is looking like 11% growth, but this is set to slow next year. But the slowing doesn't start for like another quarter, right? Because you still have a little bit of growth here next quarter. I don't know. Let's go to the EPS side of things. See what kind of numbers these are going to be. Now, this should be a little bit nicer. Of course it is. 2015 looks like 25% growth. Looking for 77 cents this quarter versus 62 cents last quarter. This is kind of important. I like to see this quarter over, the previous year's growth, because those are headline numbers that people really like to see. And then I like to look at next quarters too. So overall, you still have a bullish earnings trend here. And things are not going to slow until maybe the quarter after that, right? We will have some year guidance, but let's look at some valuations, shall we? Forward PE, probably my favorite PE metric to look at, because I'm not so concerned with what happened last year. I'd like to know what's going to happen this year. Now, if you notice, trading at a pretty healthy premium to the S&P 500, 25 times forward earnings versus the S&P 500 just looking for 19.31 now. Wow, that number just goes up every day, doesn't it? Now, I like to enter the sub-industry, so this is going to compare Las Vegas Sands to the rest of that gaming market. And you'll see they're pretty much spot on. Spot on with the rest of the industry. They had traded at a discount to it years ago. That ship sailed. Now they basically trade in line with it, okay? So there's that. Now I'm going to go ahead and enter a ticker. And the ticker I'm going to put in here is going to be, what do you guys want it to be? I totally forgot who I wanted it to be. This is how you know that Dave is, where's my list? I had my list and I lost my list. I guess we could use win. I didn't, we can use win. That's fine. Okay. So win's at a little bit of a premium. But so what you would have to do an apples to apples comparison is then we'd have to go in on win and see exactly what their EPS growth is and what their revenue growth is and everything. But it's good just to have this up here. Yeah, we got the win. We could do win here. Let's do a couple of these because we already did win. Penn National Gaming. We could put these guys up in here on par with us. MGM. Also on par with us, okay? So nothing far out of the ordinary, which is good. Very good. Now let's do price to sales here. Now this is a little rich, isn't it, my friends? Las Vegas Sands 4.88. Let's pull up the whole industry as a whole. Let this run here. Again, 4.88 rich compared to the rest of the industry. So this is the thing. Financial engineering, especially with, I mean, casinos, because you got the real estate. You can be really creative with when you're taking depreciation and how you're doing it and the equipment and all this other madness. I mean, they've got a lot of levers that they could pull to get those EPS numbers up. But the rest of the industry has those also. So why are they trading so rich? Because remember, we're not exactly looking at spectacular sales numbers in terms of growth here. Just looking at like 3% growth. So is that a little bit of surprise? Little bit surprising? You bet. Just for reference, S&P has been around 3. Where is it today? 3.59. So S&P starting to get a little rich too, in terms of sales. Okay, so a little expensive. But is that going to affect how we're looking at this options chain? It shouldn't, right? This is for, you know, I try to leave parts of the show for guys who are holding this, or guys or gals, who own Las Vegas Sands, who are thinking, should they continue to own it into this earnings report? Should you find a way to get a little bit of cheap protection for yourself if you do own it? So I cover these sort of longer-term fundamental metrics just to show you how to use the tools available at Zacks. Yep. Chart time. Oh, well, this is all sorts of screwed up. Hang on, we got to adjust this. There we go. Adjusted. Obviously, a little bit of an obsession for me on the NASDAQ. And Las Vegas Sands just don't care. I mean, this is just stupid. And you saw this with your other buddy, right? Pretty much all things. Where we're just getting exponential. Last time this thing really spent any amount of time underneath that 50-day, July, August, October, right? Came down just to test it to skyrocket up to the beginning. How much do you guys want to bet that this move from here to here, that this is the 38.2? How much you want to bet? And then we can put a target to the upside. Watch this. What? What? That just happened. Let me clear this up a little bit. Let's make this a little bit nicer. Take the bottom right here, this short-term low. Let's go to the top here. Here to here. Use this as your frame of reference. Draw your fibs. And you notice that 38.2 basically intersects with that 50-day. Comes down to it. Commodity channel index gets oversold. Perfect entry. Boom. Now you got to come up with price targets to the upside. So we can do that easily. Here I'm doing it using our free stockcharts.com here. Edit. And then, so positive numbers are going in this direction, which is retracements. So extensions, I'm going to have to use negative numbers. So negative 50, pretty much where we're at now. I'm going to do the negative 38.2. And then the negative 76.4. Give you guys some ideas, some extensions. So 50 we've hit with an overbought commodity channel index. Odds of a retrace are certainly there. This 38.2 should provide some short-term resistance, or support rather. Look at this. A little bit of volume out here. Just right in this $73 range. There's another floor for us, 74 basically. There's been a battle at 74. And then the obvious staunch support, really the 72.50. So anything under here, probably pretty solid. Could it continue to go nuclear? It would take a good report for it to continue to go nuclear. I can tell you that much. But these are levels to note. Next level, 80s to the upside. Almost 81, really. So these are targets. What has it done in previous earnings reports? Pull up this consolidated surprise. See what's happened here. When the revenues do good, or earnings, when earnings do good rather. Here's a 10-cent beat. Market didn't care. 12-cent beat. Market didn't care. 4-cent beat. Market didn't care. 3-cent miss. A little bit of market activity. 13-cent beat. Market doesn't care much. 4-cent loss. Market actually cheers it. And that was on a sales disappointment too. Look at that. That was just disappointment overall, and the market went up. So there's that. So overall, it just doesn't move too often, right? It doesn't move too much, and when it does, it's not that crazy, right? Let's look over here. Well, there's a big move in March of 2016. But a 4%, a 1%, a 50 bips, 2.6. You know, a whole lot of nada, really. And you're talking about a stock that has run up pretty good. That, my friend, is a common theme this earnings season. How much gas is there left in the tank? This first quarter, we're learning about how much gas is left in the tank on a lot of these stocks. Netflix was one of them. Actually had a lot more gas than I thought it would left in the tank. And you see what happened to Netflix. Did pretty well. Did pretty well. All right. Now we got the bar chart up here now. So they're going to report after the bell tomorrow. So we can look at this front week. change it from the stacked to the side by side. This way we're going to have puts on the right side of the options chain, calls on the left side of the options chain. This will give us a decent idea of what the options market is pricing in terms of the move here. Okay, you basically just take the at the money call, at the money puts, add them up. That gives you a pretty good idea of what the options market at least is expecting as a move for the stock. So when you see the guys on CNBC talking about it, oh, it's pricing in a 7% move on earnings, this is exactly what those guys are doing. They're just taking a look at the money calls to put, adding them up. Stock's at 77.35, so we'll do 77s. Go ahead and circle that. Bust out your handy dandy calculator. At the money call, $1.72 by $1.77. Let's call that a $1.75. At the money puts, $1.37 by $1.41. Call that a $1.39. Looking for $3.14 on 77, or about 4% is the move that we're expecting here out of Las Vegas Sands. Okay, or $3. Now, if you remember from our charting, we said $3 is basically 80, yeah, and then 74 to the downside, and that's where we've seen a decent amount of volume. So I think there's a pretty good chance that they do keep it within that range. Now, we have seen these huge reactions, other stuff, but that's already hit the books, right? So how much more could be left in the tank on something like this? So we're going to change from the side-by-side view to the stacked view. We're also going to allow some post-earnings drift to go ahead and take hold. Now, what do I mean by that? This is what post-earnings drift is, my friends. First, when it doesn't work out for you, here's a miss and a drift to the downside because of these reports coming down and everything. Here's a beat, but still drift coming down. Miss and drift going down. So it's basically just how linear is the movement between the reports. Obviously, following the last report, lots and lots of drift in the positive direction here. If you notice, though, it's a spiky sort of stock. It does have a tendency to run up, get a little overbought, and then they dump it, right? But we do have this bullish sort of trend. However, I will note that the growth just isn't what it used to be. So let's see how much they'll pay us to take the other side of some of these bets. So we said 80. So what if you looked at an 80-81 call spread going short an 80-81 call spread? So in this case, you sell the $80 call, you're going to get $1.14 for that. Now, you don't want to have unlimited upside that just runs away from you forever, so you're going to buy the 81 call, get back 86 of those cents. Your net credit on this trade is 28 cents. Difference in the strike prices is still $1 minus that 28 cents. It means you got 72 cents. So 72 cents is your amount of money you got at risk. You can only make 28. That's 38% gain that you could get potentially by shorting this out of the money call spread on Las Vegas Sands. How would you cash in on that 38%? Well, shares of Las Vegas Sands would have to close at or below $80 at expiration, in this case on February 16th. So it goes out a little bit. So these are more conservative in a very risky business, right? Options trades, out of the money, selling out of the money spreads is less risky than doing a debit spread. But you also, so you have less risky in the idea that the odds of you losing all your money are lower because the stock has to move, in this case, a couple bucks and close above that level. But that does not mean that this is safe by any stretch of the imagination, okay? So all options trading is very risky business. So that's just what we're going to call a bear credit spread, short Feb, where did I go? Feb 16, 80-81 call spread, for a 28-cent net debit, okay? Now, whenever you do that, I always like to compare it to this front week. So what should happen in this chain, because we're going much sooner, you should probably not get as much of a credit, okay? Because there's a shorter window for you to lose money. So now in this case, if you notice, selling the 8081 in that front week, the numbers are a little bit different. 60 cents is what you would get for selling that $80 call, but it's going to cost you 38 to buy the 81. So that's a 22-cent net credit, and then you have 78 cents at risk, so you can only make 28% on this trade. So that extra 10% comes with waiting, okay, and waiting for that post-earnings drift, so to speak, to take place. So it's after the report, how does the market digest the data, and what ends up happening inevitably to the stock, okay? So there's that. So that's just why I think with credits, with some credit spreads, if you're going in the direction of an earnings trend, then you want to give the market actual time to do its magic. So now on the bullish side, talking 74s. So 74 was a decent floor for us. So then if you look here at the 74.73 put spread and selling that, you're going to get 95 cents for selling the 74 put. It's going to cost you 72 cents to buy the 73. You're going to get 23 cents, 77 cents at risk, or 30%. Okay? So this is a bull credit, and that's short Feb 16, 74.73 put spread for a 23-cent net credit. So the last few weeks, we've done a lot of these iron condors. So an iron condor would basically be doing both of these. So you would sell the 80.81 call spread, you'd get 28 cents. Then you would sell the 74.73 put spread and get 23 cents. So 51 cents would be your net credit. But since 51 cents is your net credit and the difference in the strike prices is only $1, that means 49 cents is what you have at risk. So you basically put up 49 cents to make 51 cents, or just a little bit more than double your money on an iron condor here. Iron condor would be 51 cent net credit, right? But there are a few other legs in it, correct? So the commission, obviously, you got to factor that into the equation. So things to consider. Now, I'm going to get out of this. Well, actually, I'm going to stay. Well, first, I'm going to stay in this February 16th. So I was basically saying that 80 seems like a little top, maybe a good target to the top side for this. So I know there's a lot of you looking at these debit spreads and saying, well, if you think it's going to go to 80, then why don't we roll the dice a little bit on 80, right? So in this case, rather than selling this call, you'd go long this call or buy this call and then sell the 80. So this is a debit spread. Would cost you $2.44 to buy the 77 call. Simultaneously selling the $80, you're going to get back $1.14 of that. So $1.30 is your net outlay. Difference in the strike prices of $3 minus that $1.30 is $1.70. So you can make 130% on this trade, and all you need is shares of Las Vegas Sands to close at or above $80 at expiration, and you cash in there. So for these more aggressive guys that are out there, or gals, just more aggressive people, more aggressive bulls can use the Feb 16th 244, I'm sorry, 77.80 call spread for 130 net debit. Okay, so So there we go. Very good. Then on the put side, again, 74, decent chunk of support there, but there's no question that this could quickly get down to there if this report misses. Now, here's the good part. So there's a 77.50 here that you could use as an anchor instead of having to go out of the money, because the stock's at like 77 and change, right? And we said 74. I don't even think you have to go that far to really get some good bang for your buck. If you just go to this 75, buying the 77.50 put is going to cost you 223. 223. Simultaneously selling the 75 is going to cost, you're going to get back 122. So 101 is how much this put spread is going to cost you. Difference in strike prices is 250. So that means you can make 149 on your 101, or 147%. And all you need is shares of Las Vegas Sands to close at or below $75 at expiration. Okay? So pretty good. Pretty good. So this is a more aggressive bear. Let's go long. February 16th, 77.50, 75 put spread for 101 net debit. Okay. Now, there have been plenty of times where we've looked at this. We've had stocks similar to Las Vegas Sands where, you know, their competitors reported really good numbers and they're being sympathetic and they're going, and then they actually keep going. One famous case was to the downside. I mistakenly thought that, so let's call this, it was JCPenney. Let's see if I can actually find, I know I'm highlighting one of my greatest follies, but I don't care. That's what we do here. We're trying to learn. I don't think it was this August quarter. Was it JCPenney or was it Kohl's actually? I think it was JCPenney. I'm just going to give this example. I don't know 100% if it was in fact JCPenney. Now that I'm having a little brain fart, but oh no, you know what it was? I know what it was. Now I remember. It was Nordstrom. It was Nordstrom. And it was this. So we had a report that we were doing here, and the day before Nordstrom reported, one of their competitors reported terrible numbers, and they dumped Nordstrom like crazy. So I came in and we did a report on this day on Nordstrom, and I said, you know what, I think it's overcooked. And I think I sold a put spread out of the money. Well, that didn't work because Nordstrom took a tumble after earnings. So even though they had the move that was sympathetic, it just kept dumping. So don't think, oh, the move is over. It already happened because of a competitor, you know, issued a report and then they moved. So I've learned my lesson there that doesn't always happen. So let's not look at Las Vegas Sands and ignore our earnings trend just because we think it's gone too far too fast. Okay. The earnings trends are strong, and these stocks have a tendency to overshoot them, okay? So I'm going to say that the trade that pays is a bull call spread. Yes, aggressively bullish. I'm thinking that earnings season is going to shift a gear, and that now we're going to start seeing these stocks move a little bit. Because for a while there, it was the doldrums, and then Netflix came, and all of a sudden everybody's excited again. Now, if you notice, though, look at how they've been fading these moves. So this is great for us, and we're going to talk about this on Friday, about how often these moves are getting faded, these gaps up, and then they're fading it. Jeff, I saw you crying about First Solar today. Same, and they're down. Get out of here. Big spike on the Trump news, and then it comes down. I have this in Momentum, similar story. Big move up on the Trump news, and then it spends the rest of the day just giving it back. I think you're going to get this opportunity to really take advantage of a spike and then get out. I don't think we can be as patient sticking around as we were in previous quarters. But if you notice, going from 77 to 80, we're not asking for a huge move here out of Las Vegas Sands, okay? So this is more in line with, I think, where we should be here, okay? All right. If you want to be a madman, it's going to set up for a great week, I think. Because what's going to end up happening is that these companies, if they report and then they start to move in the opposite direction, it's going to make for some great fades. And I like playing fades by just buying those like weekly expirations, you know, that are like right around the corner. I like doing that. That's kind of my play. That's my thing. So the morning after Starbucks earnings will be great. The morning after these guys will be great too. So Thursday morning you can clue yourself in, because the implied volatility is going to just totally get sucked out of these things. And then you'll have, look at how it's moved already. I mean, the stock's barely up today. And look at just some of these just losing their shirts. Anyway, so if you want to play lottos, 74 puts are not a bad idea. So essentially the thought here is that they end up having kind of a bad report that people weren't expecting. And then what happens? You know, do they retrace? They could retrace all the way to 50-day on a bad report. And that's essentially what your lottos are. It's just cheap ways to capitalize just in case the thing takes a tumble. Okay? And if you're holding long term and you're worried about this kind of stuff, one thing that I like to do, collar yourself a little bit. So you can buy a put out of the money and finance it with an out of the money call if you're long the stock. I love doing that, because then if you get called away, okay, so you sell your stock for a lot higher than it was, but you can still protect yourself to the downside. In this case, Hefe, yeah, this is just front week, because all you're really trying to protect yourself against is the risk of that earnings report. And again, that's just if you're worried about it and you have a huge holding. It's just a way to generate a little extra income and have some protection to the downside. Quick little strategy for you if you're worried about it. But for most of the time, I tell people, guys, don't be worried about an earnings report. Okay? If you've done your homework on the company, you like the company over the long run, you buy the stock, you're in it for the long run, and you know, one earnings report's not going to sink you. Okay? If you're some of these other, you know, these biotechs and things like that, then yeah, I mean, you got to be on it every day, because it's, you know, at any minute you could lose it all. As they say in the biotech world, sometimes you get up on Monday and the mice are all dead. And on that note, my friends, I got to get out of here, take care of the rest of my business today. So I want to thank you so much for hanging out with me here. The participation, spectacular, new faces. Welcome, welcome, welcome. Join us in the chat room. It's going along the bottom of the screen, but I also have it up here, this discord.gg. It's right there. So join us in the chat room. Shoot me those emails, livetrader@zacks.com, if you're not already hooked up with the email alerts as to when I'm coming on. Next time will be tomorrow at 1 o'clock for Starbucks, just for Hefe. And not just for Hefe, but if I say that, then he feels special. We got to make Hefe feel special every once in a while. All right, guys. Thanks so much for hanging out with me here today on Live Trader, and I will see you all mañana. Have a good one.